everyone, this is Sharon. This week, let's talking about assignment sale in pre-construction markets. Their assignment sales and involving costs can be overwhelming. If you have questions regarding the process of assignment sales and the costs involving to buy and sell, then keep on watching. First, what is assignment sale? Simply put that, an assignment sale is a sale or assignment of a contract to purchase a pre-construction suite. When you purchase a pre-construction suite, you are given an assignment clause in right in form of the contract. You can choose to sell the assignment before a project is even built or before the completion date of the project. Usually, three parties are involved into assignment sale. We have a signer, meaning the seller in here. We have a assignee, the buyer in here, and the third party, usually the builder. Let's see a real example. Currently, we have E2 condo located at a Yonge and Eglinton in Toronto up for assignment sale. This is a 3 bedrooms, 2 bathrooms in total 864 square footage condo plus 167 square footage of the balcony space, with 1 parking underground. A signer, the seller, purchased the property from builder for $875 and $9,900 as the original price back in 2018. Now they are looking for $1.1 million to assign the property. And typically, there is a 3-step process for assignment sale. First, the buyer and the seller negotiate a contract to initiate the process, and the buyer pays a certain amount as a deposit to seller as a good faith. And the seller applies to the builder consent to assign the purchaser's name from the seller to buyer. Remember, the seller doesn't hold the title of the set unit at this stage. They only have the right and obligations to buy the unit. The builder's consent is a necessity for assignment sales. Here are some of the cost breakdown for assignee, meaning the buyer. In this case, the seller has already paid a 15% of total purchase price as deposit. The buyer needs to pay the full deposit as well as the profit that seller earned. So 15%, we are talking about $131,000 plus the profit approximately $225,000. In total, buyer needs to prepare a total cash flow of $355,000 to complete the assignment sale. Okay, you may wonder, that's a lot of money already. Why not purchase directly from the builder and only pay the 15% as a deposit then? Normally, 2 reasons. 1, assignment sale is usually at a discount price. Second, the builder may already sold out the project you are trying to buy. So on the other side, what kind of expenses that a seller needs to keep in mind then? First, we have a taxes in here. An assignment sale is treated as a brand new services for product in Ontario, and the seller needs to pay the taxes on the deposit that is being made originally to the builder, plus the HST for the profit that they are making now. In this case, they need to pay a roughly $17,000 HST for the deposit and $29,000 for the profit. In total, we are looking at $46,000 for the HST. On the other side, seller usually need helps from realtor to promote their assignment internally and pays a commission to the seller agent as well as the buyer agent, around 5% of the total purchase price. Why? As assignment sales are often prohibited to advertise by builder on a regular marketing channel, including MLs, Facebook, Kijiji, and all social media. Third one, we have the income tax paid to CRA. Unlike the resale of the property for the capital gains, the assignment sales profit are considered business income, which is subjected to a roughly of 43% of a marginal tax amount deducting their expense. Here we have the profit of $224,000 minus the commission and minus the HST paid, and we have $122,000 as a gross profit. And 43% of this goes to the tax, which is equal to 52 grand, and a final profit we have roughly of the 70 grand. So by the end of the day, it's not about how much you make, it's about how much you can keep. So since there are so many taxes and expenses involved, why a seller needs to sell since the profit seems so little? Well, sometimes the seller don't want to or can't to close on property, and closing a property usually involve in 5% as a closing cost. We're talking about land transfer taxes and etc. Some savvy investor looking at return on investment in this case, we have 53% of a return on investment or annualizations of 15% already in a matter of 3 years. This make a good investment today already. Okay, that is all for today's video. If you're looking for more advice of how to do an assignment sale, please contact me for more information. I will see you next time.